Only this session that's separating us from the wine and the dinner. Only this session stands between us. So we are all the presenters. I see Minh is here, Ruth is here. Now, see Gunnar, third presenter. Okay, we'll have the first two, so but we'll get started. Do that. Okay, so we are on to the final session of the day. We have three presentations. The first one is by Minh on inflation targeting and its labor market implications, looking specifically at the gender implications and the formal and informal employment, how it affected. Followed by a paper by Ruth Badru, and that's looking at fiscal policy. So the first one is on monetary policy. The second is on fiscal policy. But unlike the first paper, which is looking at a single country, Thailand, Ruth is looking at a cross-section of countries, I think 47 countries, something of that order, right? So full data from a variety of countries. And then the final paper by, which is going to be presented by Gunnar, is about Colombia. And that is looking at a slightly different topic, but again, looking at the labor market impacts, but in this case of education and improving the access to education, how that affects it. So without further ado, let me pass the floor to Minh. Thank you. Please, you have 15 minutes.
Quite introduction, and thank you for having me here. My name is Minh from Srinakharinwirot University in Thailand. I'm pleased to present my preliminary work on the labor market response to inflation targeting as a monetary policy in Thailand. And we also look at the formal and informal employment in that through the gender. So first of all, then we may know that monetary policy seems to have like a universal effects, and the central bank everywhere assume that the effect would be for everyone be the same, regardless of different groups of the economy. And in the literature on monetary policy, there are many different channels that, in fact, monetary policy can have distributional effects on different groups of the economy. The heterogeneous effects of the monetary policy often affect different segments and different groups of the labor markets, and that will be well documented in the literature. So what happened in the developing countries is that one of the typical characteristics is that we also have a large informal sectors. So that would be like from 50 to even 80% of the employment which are informal. So I haven't seen any kind of specific research looking at the impact of the monetary policy, or at least the response of the labor market on two different segments of the labor market. So that is the reason that I'm focused on this new aspect, and for the case of Thailand. When we talk about inflation targeting, that we know that is started in New Zealand about 30 years ago, and they are going to celebrate that kind of new policy. So this is the central bank commitment to keep the inflation at a very low rate, and sometimes by keeping those commitments, they have to sacrifice some of the other target, for example, employment. Unemployment rate may be very high given the inflation targeting. So what we see from that kind of the I mean, the principle that when you keep the low inflation, you have the high unemployment rate. So the case of Thailand is a bit different from that one, because we maintain quite low unemployment rates for both men and women, around 1% for over a decade. So it's kind of the special case that why. Once we implemented the inflation targeting policy, but we still can keep the low unemployment rate at the same time. So there's kind of evidence from different countries, including the OECD countries, and also other studies by Bristol and hence in 2011. Looking at the different impact of the monetary policy on men and women, but all of those is in the formal sector, not the informal sector. So I hope that with my study, we will have some more insights into the different aspects of that. So in Thailand, we have the inflation targeting policy in early 2000. It starts from the very wide range of the inflation target, and then it narrowed down, and then it become more flexible, saying the central bank committed to keep inflation rate at like 2.5 plus and minus 1.5%. So basically, it can be in the range of 1% to 4%. So that's why we call it the flexible inflation targeting policy. And as you can see from the graph, is that we have quite a low unemployment rates. Right after the financial crisis in 1997, that was the highest unemployment rate that we have. But over the time, in recent years, it's just about 1% for both men and women. The thing is that the labor force participation of women, as in other developing countries, is often very much lower than men. And it has been reducing over years as well. Before it can be like a 70%, but right now it just maintain like a 60% for women. So this is another the aspect that we look at. The graph on the right hand side at the bottom is the ratio of the share of informal employment, which is about 50%. It's quite consistent over time. That means over the last 2 decades, we maintain the informal sector, informal employment at the rate of about 50 to 60%, most of that in the agricultural sector and service sectors, where you can imagine that a lot of women are dominant in that those sectors. At the graph up there, you can see that it's the different type of the monetary policy framework that the Bank of Thailand used. So from early 2000, you can see that inflation has been maintained, and then at the same time as an open economy, then exchange rate is still one of the factors that the central bank quite pay attention at. Meaning that it's not totally float exchange rate policy, but it's like a managed floating exchange rate. So the objective of this research is that we want, to explore the effects of the monetary shock on employment, not only employment, but also the labor supply that may affect men and women and people in the different sectors, formal and informal, and across economic sectors as well. So we have several research questions here that we want to explore. And the key point here is also want to explore that whether when the central bank raise the interest rate or reduce the interest rate, does it have like a different magnitude of the effects on the employment of the workers, male and females as well. So there's quite a bit of framework on the channel that the monetary policy can set different effects on different groups of people in the society and in the economy. So the first one can be the saving when you have the interest rate charge, deposit rate, or lending rate. It can be different. The second one is like the asset channel, where people have different type of asset, different maturity. So when the interest change, your income also changes. The third one is the household heterogeneity channel. And the fourth one is also important about the income composition, whether your income come from wage or come from profit. But in this research, we particularly look at the earning heterogeneity channel, where the wages and the employment of different types of worker can also actually see the different effects and different response to the monetary exchange. And we also borrow the framework by the feminist economists, where they look at the effects of monetary policy based on the supply side and the demand side of the labor market. For example, on the supply side, then men and women may have different level of human capital, and the other factors like the institutional or the social or the context around can also affect the labor supply of men and women. On the demand side, then clearly we have the gender segregation across the economic sector, across industry, and also the occupational segregation as well. So often we talk about, for example, like the 2008, it affects more on men than on women. So we call it like the men's recession, because the industry like manufacturing or construction was heavily affected. But as you see with the pandemic, it's another type of crisis where women is more affected, because it's affecting the sector like the healthcare and the service sector. So clearly that is a different type of two different episodes as an example, that we can see that crisis that can affect men and women differently. So in the case of Thailand, then we also, because it is the highly open economy, so exported oriented and labor intensive industry is also the factor that we need to consider. And of course, in this case, the exchange rate plays a role. So I'll just briefly talk about the data that I used here. So there are two sets of data. The first one is the macroeconomic data. So we use quarterly and also monthly macroeconomic data, including, for example, GDP. We have the data breakdown by economic sector. So it's like a 20 economic sector quarterly data for GDP, for example. And we have the unemployment rate and labor force participation for men and female separately. We also look at the exchange rate using the nominal effective exchange rate and real effective exchange rate as well, and CPI. And the most important thing is the policy rate that the Bank of Thailand announced almost like a 8 times a year, right, during their monetary policy committee meeting. So that is the key variable that we use as the change in the monetary policy. But of course, we also look at the lending rates that offered by commercial bank in the financial markets. The other one is about the labor force survey, and this is important because we also use the informal employment survey. But this one, unfortunately, we don't have the quarterly or monthly data, but it's yearly data because it's conducted only 1 quarter of the year in Thailand. So from this data set, we calculate what is the share of the employment in each sector. I mean, the share of informal employment in each sector. And we also calculate the hours as the labor supply variable for our study. So with the empirical strategy, we actually have 3 different models. We started with the very simple single equation model, where the dependent variable is the ratio unemployment of female over the unemployment rate of male. So that ratio depends on we request on the policy rate and the GDP growth. This is not at the sectoral level, it's the national level, it's the policy, it's the quarterly data. But the second one, due to some endogeneity concerns, then we also take the second one, the VR model. And the last one, which is the most complicated one, is the panel regression model, where we look at the fixed effect, and then we have the data of the informal sectors and across industry for like a 20 industry and across 18 years. So it's quite a bit of the observation. So this is the procedure. We do some unit group tests, and then it turned out that most of it is the I1. So we take the first difference as well. This is the single equation model. So you can see on the first row, then we see the policy rate have a quite a consistent effect on the ratio of unemployment rate between male and female. So the positive one, meaning that when the policy rate increase, then women seems to be more vulnerable to unemployment risk than men in this case. So that is the result that we have, and is the magnitude also very consistent across model. The second model that we use the VAR. So you have you can see here the impulse response function. Then at the top of the panel, so this one you see is a bit small, but it is the response of the employment rate of female over male, because due to one change in the standard deviation change in the lending rate. So it seems like in the short term, there's a negative effects of that. Meaning when you have the hike in the policy rate, then in the interest rate, then it turned out that the employment of female over male reduced. So it's like a negative effect. So it's quite consistent with the first model that we have. Right. So here we also use the first difference, and you should look at the last one, this one, where you also see the similar effect of negative in the short run, but then it will die out over time, almost like a 6 quarters in 1.5 years. So lastly, we look at the last model of the panel data across 18 years and across 21 economic sectors. So here, at first, I want you to look at how gender segregation really differs across the industry. So it seems that there are some industry with the female represented, highly female represented, mostly in the service sector, or this one is like a trade and retail, but not much in the construction and manufacturing one. So there's a lot of variation across sector, but also means it's quite consistent across the year as well. As you see, the distribution is quite with the and this one is another distribution, but by the share of informal employment across the economic sector, and this one vary much more. But also there's a difference in the across economic sector as well. And then here is the result that we have, and here you can see that we control for the share of informal employment in each sector, and also the square of that ratio. And it turns out that we have here is the policy rate, the mean of policy rate over time, and it's a positive coefficient, meaning that if the policy rate increase in the policy interest rate, then we have a higher share of higher employment for female, and this impact is a bit different between male and female population. It's like a 0.6 here and 0.8 here. But the thing is that we want to make a difference here is we separate the impact of the interest rate hike and interest rate cuts. So we count how many times of the cuts and how many times of the hike within 1 year. And we take that variable into this, and it turned out that it has a negative effect, meaning that when you have more times of more frequent hike in the interest rate, that it will reduce the employment of men and women. But it turned out that the effect of men and of male and female employment more or less the same, 2.9 and 3.4%. But we don't see any effect of the negative cut. Thank you. So this is my just key findings that I just summarized to you. The first one is the policy rate exerts some positive and significant effect on unemployment ratio. So the implication is that women are more vulnerable to unemployment risk than men. The VAR model also confirm this one, but the last one seems that we have a kind of mixed result, and our model needs to be more calibrated. So this is work in progress. So we haven't run the last model on the work hours, I mean the labor supply for each. And the random effect, we should also try. And the measure of the interest rate cuts and interest rate high, we should measure in terms of magnitude of the change, not only the how many times of the change as well. And the threshold model may be important in this case, given the heterogeneity of the data. So I just stop here. Thank you very much.
Thank you. I would like to invite Pavlina to offer her comments on the paper.
All right, thank you so
5
much.
minutes, Pavlina.
Okay, thank you. Thank you, Mintam. I enjoyed reading your paper, and I thought most useful would be for me to confine my comments to maybe like the 10,000-foot capital M methodology questions. I mostly read the paper before the results came, so it was the motivation. I was just thinking through, and now piecing together some of your results. I think my main comments are on how do we like interpret what's going on in terms of like monetary policy transmission mechanisms. So, and also I want to connect a little bit some of the changes in the literature that we are seeing both in the mainstream and the heterodox on the effectiveness of monetary policy. So, first, there's limited research on the gender effects of monetary policy. The paper is well grounded in the existing literature and uses existing methodology that we find in Stephanie Seguinus, Heinz's paper, Brownstein's as well. And, the extension, of course, is the informal market, which is also a very interesting question considering the size, and that has not been done before. And your results seem to corroborate some of the earlier findings that are for the US and other contexts. So there is this kind of negative differential effect on women versus men from increasing in interest rates. Now, but when you start disaggregating, then those disappear, right? Or they become mixed. So then, how do we interpret, through which channels then monetary policy is impacting women versus men? And here the question of transmission mechanism is very interesting because ultimately these studies, so this is, the big M methodology question, ultimately these studies are based on a Taylor rule and on some kind of inverse, some kind of trade-off between inflation and unemployment. And then there is in there embedded a sense of a Phillips curve and a Nairo. Okay, and this is a bit problematic because, the heterodox theory for a very long time has been critiquing this particular relationship, both on theoretical and empirical grounds, but now there are rumblings on the mainstream side as well. And, the mainstream is saying, well, the Nairo relationship has broken down. We don't know how monetary policy is working. You might recall, Jerome Powell making these statements before the pandemic and saying, well, we don't know what the natural rate is. We don't know. We need to find it. We need to know what it is, but we don't really know, how monetary policy could continue to support labor markets or conversely post-COVID it generates soft landing. So now in the mainstream, there's a whole conference in Jackson Hole last month that is focused exclusively on the monetary policy transmission mechanism, and you won't find anything about the Nairo in there, okay, on this trade-off. You will see, transmission mechanism through financial markets. You will see, through maybe interest rate sensitivity. You will see, GDP investment and other things, which are, of course, gender insensitive statistics. And so we're faced with this little paradox that we want to do gender sensitive analysis, and looking at labor markets is where we get some of this differentiated data. But at the same time, we're looking for a relationship between interest rate and unemployment that might be very weak. And that might not, theoretically, right, it might not be as weak. So, but you're finding significant results, right? So then how do we think through, how do we interpret what might be going on? And these are formal, right? These are all the formal labor market statistics, right? It's not informal. We are not looking at the informal yet.
Yeah, I just include the share yet, but the little one, yeah.
The share, yeah. So, you know, I mean, it's a very curious question, like what, you know, what is going on in terms of when you're presenting the results, I would urge to situate this in these debates and this literature and try to maybe articulate what, you know, through which mechanism is monetary policy affecting these labor outcomes. You know, and then what is really peculiar also is that there seems to be an asymmetric effect, right? So heterodox theory for a very long time has been talking about the weak impact of interest rate and investment relationship by implication on labor markets, but you have an impact on in the opposite. So you have an impact when interest rates are going up, negative impact on employment, but you have a very weak impact when interest rates are going down to stimulate employment. So again, I think it's a question of how do we theoretically justify the way monetary policy might work. And then, of course, that will have policy implications. What does that mean for monetary policy? If interest rate increases have this negative differential effect, are we then suggesting low and stable interest rate policy? Are we suggesting that the Taylor rule is not an effective way to macro manage the economy, to fine tune the economy? And then if lowering interest rates, right, is again relatively ineffective, then, you know, again, it will have implications for other policy tools. I thought there were lots of interesting questions that you raised in this paper that could come out of this. And clearly there are like research extensions because you could model other channels, right, through which, and you list like 5 from the Dolado paper. I won't go into that, but you're mostly focusing on the aggregate demand effect. But I think interest rate sensitivity, access to financial markets, access to credit, like these could be future areas of research of measuring the impact on monetary policy.
Thank you very much. We next have Ruth Badru. The paper is titled, "Does Fiscal Policy Shape Gender Equity?"
Hi, everyone. I'm going to time myself so I can keep this short and not so painful because I'm sure everyone's tired already. Okay, so I should start by saying that this is an empirical paper. Some of you might question my approaches, and that's absolutely fine. And what I try to do in this paper is we talk a lot about things like gender. I've been doing gender research since my PhD, and macroeconomic research, you can have wage-led growth, profit-led growth, all of those things. And some of the things that we often talk about are things like women's capabilities, and that's come up a bit in today's conversations already. And I figured out, why don't we try and measure capabilities and livelihoods and empowerment? And that's why some of them I want to crucify me, but it's not. But in terms of why I thought this might be important was just sort of thinking about the fact that more often than not, and perhaps I'm the most guilty of this, is when we think about gendered outcome from a macroeconomic perspective, we're often thinking about very specific labor market outcomes. So women's wages, women's employment, but that does not sort of capture the entire spectrum of women's economic well-being or even socioeconomic well-being. And so I thought, okay, if we wanted to do something like sort of capture those other dynamic aspects that are not so easily measurable, what do we want to, like, what's the key tool or key policy that can influence these sorts of outcomes? And again, from a very sort of basic standard macroeconomic perspective, well, fiscal policy is often the key redistributive policy tool, right? So let's see, does fiscal policy actually impact on women in the way that we would expect it to? And if we kind of disaggregate fiscal policy into social and physical infrastructure expenditure, how would the effects differ? And so that is sort of what I try to do, and this is the background. Don't mind me, I do not refer to the slides a lot. It's mostly for you to read, that's your job. I'm just going to tell you what I think. So these are some of the things that motivated the questions that I wanted to ask with this paper. So how do we kind of start off with kind of measuring capabilities and livelihoods and empowerment in a way that I hope makes sense? And how do we think about how fiscal expenditure kind of features in that perspective? And if we look at countries by their level of income, so high income countries, low income, middle income, what might the differences be? And does the magnitude of spending actually matter? Is it just spend and you're fine? Or that you have to spend up to a certain extent, are there thresholds, or are there diminishing returns? And what are the interrelations? That part's the last question. I haven't done that yet. I'll do that in the extent. I think everyone has called their paper a draft, but it feels like they've done the main analysis. So maybe I shouldn't call this a draft. This is a work in progress. So I've done some of it, not all of it. Okay, so the first question was sort of how do we construct these latent variables? There's capabilities, obviously, livelihoods, empowerment, and agency, they're not easily measurable. But there is some idea of what these variables mean, right? When we think about capabilities, we're thinking about the things that allow women to actually access a good or have a good economic life, access economic opportunities. So are they educated, they have good health, and same thing with livelihoods as well. So thinking about the actual ability to work. Are they working? Do they have access to credits to maybe create their own job opportunities? And then empowerment and agency. I think empowerment and agency is a little bit more vague in the sense that everyone has their own definition of it, especially if you think about economics, sociology, and different disciplines. But how I wanted to think about empowerment and agency here was thinking about women's ability to influence decision-making at the household level and at the governmental level. So these are some of the things I sort of thought, okay, if we put all of this together, how do we then generate a sort of variable that allows us to measure capabilities, livelihoods, and then women's empowerment and agency from a very macroeconomic level? And so I think I'll skip through all of this because we've talked about a few of it already, the capabilities approach, the feminist economics and all of that. This is some of like the motivating concern, and they're related to all the things that I've mentioned already. So just to spare the suspense, I'll tell you kind of what I find at the beginning. So what I do find is quite interesting. It does seem like fiscal policy is not quite all it's cracked up to be. It doesn't really do so much in terms of thinking about gendered well-being. And at first I thought, okay, maybe this is because I have grouped all of these into these latent constructs. But even when I disaggregate them, which I have done a bit of that, it still doesn't show up as much as being so effective in terms of improving women's outcomes. So maybe fiscal policy alone is not enough. And then social infrastructure might be good, but you'll see in the result that there are times when we actually see negative effects on women's well-being from social infrastructure expenditure, especially in the short run. So skip this. What do we do? Like I said, it's a very empirical paper. I have decided not to bore you with the econometrics, but in a nutshell, we do some long run, short run analysis. So I use an autoregressive distributed lag model, which I then further disaggregate into thresholds. So cross-country analysis, I have 45 countries in my sample. If you ask me to tell you about the data, I will, but it will not because I'm happy to do so. I'm traumatized by trying to collect this data. I don't want to buy it. But if you ask me, I'll tell you. In any case, so it's cross-country, 45 countries. It's collected from 1991 to 2023. I will admit to 2023 data being mostly interpolated. Because we have most data until 2022. And then to construct the latent variables, I use a dynamic factor analysis. So I suppose the dynamic factor analysis, I'll talk about that very quickly, is what to do that actually, hopefully you can see this, but these are some of like the indicators that are contained within the different constructs. So I do calculate my social infrastructure expenditure, my fiscal infrastructure expenditure variable. There are avenues where you could get that data itself, but the reason why I wanted to calculate it myself was because in further analysis, I wanted to see how maybe expenditure on transportation has a different effect compared to expenditure on communication and things like that. And then for the dimensions, the gender constructs or capabilities. So like I said, when I thought about capabilities or when we talk about capabilities, what we often think about things that allow women to access give them the ability to access good socioeconomic opportunities. So I thought about health, and the only actual measure of health I could get on a macroeconomic scale was maternal mortality ratio. That's my variable for health. And so then thinking about women's education and attainment, labor force with advanced education, and also labor force in general. And the idea here was that if these factors are improving, then that gives us an idea of how well women are doing in terms of, are they able to access these jobs in the first place? Do they have the requisite skills and all of that? And then livelihoods kind of then talks about, well, what is then happening? Haven't had an education, what does your job or economic situation look like? And those are some of the variables that are captured there. The one variable that is missing there is women's access to credit. So that should be there. And then for empowerment and agency, like I mentioned, sort of thinking about decision-making abilities, both at the household level, at the firm level, and at the government level. So those are the variables that make up my key variables in the study, or the indicators that make up my key variables in the study. And so using dynamic factor analysis for those latent variables, specifically for the gendered variables, all I do is kind of those key indicators, group them together in a way where we then extrapolate some of the key trends that kind of showcase the fact that all of these variables are sort of related. A kind of regression analysis, but not really. But what we're doing is kind of extracting that latent factor that represents an underlying trend or an underlying relationship between maternal mortality, educational attainment, labor force participation, and so forth. So that is how I construct my latent variables. In terms of my econometric analysis, again, I use an autoregressive distributed lag model. There are a few things here that are involved. Because I'm using cross-sectional data, one of the things that I wanted to be careful about was not making generalizations. So while I do have, and I'm presenting the results for my panel, I do have mean group results for each individual country as well. And so in doing that as well, I use a threshold analysis to kind of capture the magnitude of fiscal expenditure on social or physical infrastructure. And I use common sort of cross averages of each of the countries within my sample as well to kind of account for the fact that each country is going to have a unique starting point, and also account for the endogeneity that might occur and interrelationships amongst the countries as well. And perhaps the most annoying part of my empirical analysis is that I always tend to use Jacknav bias correction, which means that to run one regression takes me an hour and a half, and that is the simplest model. So I use Jacknav bias correction mostly because there is an interpolation involved, and we want to make sure that we find the best model that has the best fit and that has the best log likelihood. So I'm not just telling you stuff that looks good but doesn't really actually make any sense. And then the diagnostics, for the latent constructions, I do use the Tucker-Lewis and compatibility factor index and chi-square test to kind of check to be sure that the latent constructs actually are a good fit. And I would say I played around with that a little bit, tried a few different variables, and the chi-square itself determined how the variables that I ended up with in my latent construct. And then for the fiscal policy identification, I knew I wasn't going to show any maths, but just very quickly, what I wanted to do was just capture the threshold. So if the magnitude of fiscal policy was at the 25th, 50th, or 75th percentile, and also thinking about the income grouping, whether they were middle, high, and okay, I forgot one thing actually. Sorry?
Middle, high, and low.
Oh, it should be, but I couldn't get data on a lot of low-income countries. So I started my paper writing middle, high, and low. And eventually, at some point, I had to give up and change the low to lower middle income, with only like 2 countries being low income. So I will admit to that manipulation. So you'd see that it's kind of changed. My discussants will probably see that narrative kind of changed somewhere in the middle. So what did we find? In terms of capabilities, for the most part, it did appear that social infrastructure tended to have a positive effect on women's capabilities. but especially in high-income countries. And in low-income countries, we very rarely found, or the lower to, when I say low-income, just know I mean low to lower middle. We very rarely found any sort of clear indication of how fiscal policy, whether on social or fiscal infrastructure, was impacting on women's capabilities. And in fact, what we found in these lower-income countries was that in the short run, the effect was negative. And it did make me wonder, why might the effect be negative? And I think maybe one of the things that if you are spending a bit more, say social spending and trying to improve women's education and health outcomes, that might actually mean that there's some sort of displacement that happens in the short run. Maybe women who were already involved in work or contributing to household income might end up having to leave those to access this education, which will be good for them in the long run, but in the short term, there is some maybe loss of family income. So I thought that was an interesting result that happened there. And another thing too was that the magnitude of fiscal spending actually also mattered. And for low-income countries, even when the results were not statistically significant, you could see that at the 75th percentile of social expenditure or social infrastructure expenditure, the effect was much more positive. And at times, the effects were negative at 25th, negative at the 50th, and then the 70th percentile, the effects became positive. So the magnitude actually of social infrastructure spending does matter, as well as the starting point. So it almost appears as though with high-income countries that already have this sort of set of infrastructure, those effects come out more cleanly. In middle to lower income countries, the effect is not so clear. I have 2 more minutes, I think. And then for livelihoods, and I'll just sort of jump to the key conclusions. For livelihoods, what we did also find was that social infrastructure tended to affect women positively, again, particularly in high-income countries. Fiscal infrastructure, it doesn't seem to come out a lot as far as this data is concerned anyways. And for livelihoods, I was very curious about this one because I couldn't quite, it didn't really make sense to me. I thought it should be kind of a more direct relationship in terms of fiscal infrastructure, especially physical infrastructure, improving women's access to jobs, for example, which is something that we've seen in the literature. And so I did a little bit more disaggregation analysis here, kind of looking at the particular type of expenditure and not just livelihoods as a construct, but the particular indicators within livelihoods. So how does fiscal infrastructure expenditure of transportation, for example, affect female employment? Positive results, but not statistically significant. And that is for high, low, middle income countries. So even as much as I broke all of those factors down, the only factors that seem to come up as statistically significant were the effect of fiscal infrastructure as a whole on the ratio of female to male wages, which I thought was interesting. And for livelihood, it does seem that per capita income tends to have a negative long-run effect on women's livelihood, which can be surprising or maybe not so much, especially for middle-income countries where research has shown that because of these being export-oriented countries, at times growth in income may not always be conducive for gender equity. And then finally, on empowerment, I thought this was also quite interesting because even with the correlation analysis, what we found was that the indicators for empowerment, the political indicators, or even the firm level indicators, so how represented women are in managerial roles, how represented women are in national parliaments, were very highly correlated, but they were not correlated at all with women's discretionary power on household income. It almost seemed as though there was a very strong disconnect between how well women were doing in political sectors or in places of power, but that didn't really transfer to how well they were doing at home in making household decisions or having discretionary use of their own income. And I thought that was interesting given the data set. And then finally, for low-income countries, we don't see any statistically significant effect on either social infrastructure spending, GDP, or even physical infrastructure spending on women's empowerment. And the coefficients are so large that I tend to not always assume that because there is no statistically significant effect, that means that there is no effect at all. As a macroeconomist, you would know that. But the coefficients are so large that it almost makes zero sense to try to infer any relationship whatsoever. So my assumption is just that fiscal policy has nothing to do with women's empowerment. in low-income countries, full stop. You can correct me if I'm wrong. But in any case, it does appear as though GDP seems to be the strongest driver of empowerment in middle-income countries, at least as far as we measured empowerment. And I think overall, the story is pretty much what I've said before. Maybe fiscal policy is a good tool in the right direction, but it really does have to be targeted. And we have to think about not just fiscal policy, but maybe legislation that actually advances the cause of gender equality. And especially, I was talking to Emily, who's a fellow Nigerian in the room today, and we do a lot of work with local governments in Nigeria. And just talking about all the disgruntlement that happens when you affect bills that never get passed, and it just doesn't seem to translate from paper to actual reality. It does make sense that at times all of these spending initiatives that happen, while they all sound great, they don't really end up having the core, they don't suit purpose, mostly because they're not specific or targeted enough. And so thinking about fiscal policy broadly, we also have to think about the gendered effect, and I guess that is something to talk about with policymakers. And thank you. I think that's it.
Thank you. Minh, you please come forward to discuss Ruth's paper. You have 5 minutes.
5 minutes. Yes. Thank you, Ruth, for the presentation. First of all, I say that I enjoy reading the paper. And I also learned a lot from that because somehow it's quite related to my own paper on monetary policy. I realized that there's some unique in your papers. I mean, the contribution from your paper is like you look at different income level of countries, but at the end you said that you drop the low income country out. It's a core country study and different level of income, and you also look at like a different type of public expenditure, meaning on the social infrastructure and the physical infrastructure. And the important here is that you look at like kind of the 3 different type of mechanisms that how the fiscal policy can affect men and women differently. This is the 45 countries, but at the end you reduce to like less than 45, not 45. Oh, still 45, yes. So the version that I read and the one that you presented is a little bit different, but somehow the main idea is still there. There's some of some point that I want just like wondering whether you can explore a little further. For example, when we look at the different country level, the GDP per capita level is not low. For example, if you look at the demographic structure of the country, that might have some effect on the dependent variable, saying that if the country is aging very fast, so you have a large proportion of the elderly. So in that case, the infrastructure, for example, on the care infrastructure might be different as well. So that also affects some of the sub-indicators that you have in the 3 latent variables. For example, the unpaid work that you have. So that definitely affects the time that people have to spend, given the demographic change of the country. So that is the one point. Okay, and what about the other control variables, saying like the poverty index and the multi-dimensional poverty index as well, because they look at the health indicator as well, because you have some trouble looking at the health indicator that you want to include, right? So the multi-dimensional poverty index might be a little information there. You also have the in your Moodle you have the structural breadth test. I'm just wondering whether, because your time series data is a bit long, then it covers both the financial crisis in 2008 and also the pandemic, right? And we know that the fiscal stimulation in that 2 different crises are critical different, right? For example, the second one, there's a lot of the fiscal stimulation in the healthcare sector, for example. where the previous ones may be a little different. So, so probably including some dummy variable or the structural break between the two might give you some idea. The last thing is the kind of the biggest concern is the heterogeneity effect in your regression model. For example, from the older version that I read, you said that the labor force participation between men and women turned out to be the most important determinant for all the three latent variables. Right? But if you look at the component inside the three latent variables, then there's a lot of the indicator already there. So, for example, in the if I remember well, for example, in the employment and urgency, right, you have the proportion of time spent on domestic and care work, and that one definitely correlated to the labor force participation of men and women. So I think there might be some possibility of the heterogeneity concern and reverse in this case, or even in the livelihood, right? Livelihood indicator. You said that you have the hard time trying to explain why the physical infrastructure doesn't have like a significant effects on those things. Because in the discussion, when you talk about the different mechanisms that why physical infrastructure seems to have the positive effects on the livelihood. And you have several examples of countries like India, or the other country with the electrification and the metro one. So yeah, we need somehow need to explain why there's no significant effect, even though that in the literature it seems to be very positive. So my comment is just there, and yeah, I think you can improve the paper much further given this one. Thank you.
Thank you, Tcherneva. I'd like to invite Gunnar to present the last paper of the day. Oops, sorry.
Hi.
15 minutes.
Hi, my name is Gunnar. Thank you for having me. I am the last paper of the day. I think the last obstacle between you and the wine. Okay. So today I'm gonna tell you about this paper about Bolivia that we wrote, talking specifically about female labor force participation in informal markets in Bolivia. So let me tell you a little bit about the motivation. As you know, developing countries always face a challenge of enhancing women's participation in the labor force. Also, developing countries are characterized by a large informal labor sector. So it turns out that a large percentage of women are in the informal sector, right? So it seems that there is an interaction there because women's labor participation impacts economic growth and poverty reduction. So the fact that we can improve female labor force participation in this country is not just for the women, it's for the entire country. See, okay. So if you review what the literature has said, what is it that we have for research? What can we say we know? We can say we know that women have this disproportionate role in caregiving responsibilities, childcare, elder care, mainly childcare. And if we look at other characteristics of developing countries, we know that childcare, a place where they can go and drop the kids is non-existent, right? It's not like the US. So pretty much this burden falls into the mother's hands. So it is known that these factors actually hinder women's employment opportunities and might be a reason for them to be pushed into informal sector jobs. So that is what we know, that is the setup. So informal sector jobs, as you know, and they have poor quality, limited advancement opportunities, so everything in the end, snowballs and becomes a problem in this whole environment. So, if all this that I just told you is true, so what would happen if, for some reason, school enrollment for the kids, right, for the children increases exogenous, right? So what would happen? Well, if we believe the story that the effect would be that women's availability to access formal jobs increases, right? And I say availability because it's more than time, right? We might think it's just time, but it's more than time, right? It's having the mental bandwidth of doing a job and not having to take care of a kid, right? It's a lot. So Bolivia, which is where I come from, is actually an ideal case to study this mechanism because something did happen there, and therefore we can actually start studying a before and after. So Bolivia has probably the highest level of informality in Latin America, if not the world. And at the same time, if we observe what has happened with the profile of women's participation in informal markets, we can see that it dropped significantly. And at the same time, something did happen. The government during those years, like at the beginning of the 2000s, did implement an aggressive policy to increase children's enrollment in school. So that is what I want to show you in this graph. So the graph on top, that would be the years 2000, 2003, roughly. And the profile, the blue profile below, that would be the year for the year 2013. So as you can see, this is just in case, this is the informal share of female working labor force participation, right? So it's pretty much by age. I can see what was the percentage of women working in informal markets. So it did drop, right? In sort of roughly 10 years. So the question is, what happened? What happened during this 10 years? So, like I was telling you, there were aggressive or really pressing policies to increase children's school attendance in Bolivia. This was the conditional cash transfer that they implemented, which was very effective in many ways. And given this whole story that we know that this would have an effect on the labor market decisions of mothers, we try to build a model that would actually map this behavior. And like a motivational example, right here, there has been a significant decrease in female informal sector employment for ages 30-34. And if we look at the data, this age group corresponds to the average age of mothers with children aged 6 to 8. And during this period, school enrollment for children aged 6 to 8 has increased enormously, very substantial. So, we have the evidence, we have some theory. What we don't have in Bolivia, unfortunately, is data, a lot. But what we try to do to compensate with that is doing some structural modeling and having plausible assumptions. So for that, we built a dynamic programming model, right? So it's taking into account heterogeneous agents. It's a little bit of what has been used lately and studying effects of policies. So, but the idea is that we try to capture what would have been. What we try to do is model the situation in the early years in the 2000s, match that with plausible assumptions, and then just change the enrollment probability of children such that we can see a pure effect in the model of this enrollment probabilities on the informal labor force participation of women, mothers. So for that, of course, we have to do a lot of assumptions, simplifying assumptions. And then we try to see how much of the actual decrease that I just showed you can be accounted for children actually attending school in larger proportion. So that's what I'm going to try to convince you that we did. So I'm going to go over the model pretty quick because it's can be a little bit long. So, but we model mothers or women decisions from the point of view of a household. Okay, so we're going to say households maximize expected lifetime utility. That is going to be a combination of the husband and the wife, and we try to capture the incentives that female workers are going to have for whether to participate in the informal market or not. As this type of model, we have an intertemporal separable type of utility functions, meaning that we're going to be able to do a life cycle. Depends on consumption per adult. The life utility also is influenced by the labor supply decisions, which is going to be the main characteristics that I'm going to show you here. So while we are going to focus on women, I'm just going to have what the male worker is doing, but I'm not gonna model that part. And another very simplifying assumption, I'm gonna assume that they have the same age and that they retire together, right? So with the hopes that my model can become a little bit simpler. So the first utility function that you can see there, that's the one for the mothers or the women, and the second one is for the parents. For the dads, for the fathers. So as you can see, what I am assuming here is that decision, right, of going for informal markets, FT, formal sector participation indicator, is going to be directly affected by that B, which is the wife's utility for formal sector participation, right? So in those two parameters, mainly B, is where I'm trying to capture how school enrollment of the children is going to affect the utility of the mother, right? So my assumption is, that this is an unfair scenario, and actually it's not new in the literature. So it tracks, you can say, this cultural assumption that the mother is going to be in charge of that. So children's assumptions: children's school enrollment reduces B, right? Her services are not available, and other macro parameters. So we have our intertemporal constraint, right? Which is going to be the usual one, as in any life cycle model. But now I'm just going to focus on what would be the wage for the mother, and it's going to have a premium if she decides to participate in the formal market, and not if she decides to stick to informal markets, right? And there's no chance that she doesn't work. She has to work either in informal or formal, right? The only difference is that if she works in the formal market, right, there is a chance that she doesn't get it. Right? So that's 1 minus PE, right? And that E stands for education, which adds another level of heterogeneity here. And skill level Z is going to be a shock that we're going to use to generate heterogeneity in the dynamic programming model. And consumption is deflated. You're going to see what this means, because the utility function is a household utility function. And here's the central part, that is this utility B, right, which is this utility that the mother is going to face, depends on the children's school enrollment probability, QT, and that is the only parameter that I want to move to make this experiment plausible, right? So that's the one that I'm going to adjust for the early 2000s and then for the 2013, and all the parameters are going to be the same, right? So in this case, we have that is going to be the specific burden, that B, right? And it is going to be, a probability of whether the actual burden is high or low, and we're gonna say high, it's gonna be high if the children are attending school, and it's gonna be low if the children are not attending school. And other burdens that they just add to complete the model. We have our typical recursive form of the value function, which we're gonna, as you can see, the utility now is a combination of the mother and the father with UM and UF, right? So we already know what that means. We have some other assumptions for the retirement years that I'm just gonna skip. And the parameterization, which is, you know, really the hard part, because in Bolivia, we don't have the beautiful data that there exists in the US or Europe. So we had to come up with different techniques to make this possible. So I'm gonna skip that. And I'm just gonna show you what, before I actually show you the final result, let me tell you how things did change in 10 years regarding school enrollment rates. So in 2006, you can see age, that's the age of the children, average age of the children, right? So those were the enrollment rates, right? 0.6, 0.6 for those primary years, right? And a little bit lower for secondary years. And after the 10 years, this enrollment rates did increase, right? From 0.6 to 0.94, right? For example, age children 5. So we are able to map that age, that age of the children attending school, we're able to map to the average age of the mother. So I'm not going to talk about what we did for retirement. It was more like to mimic what happened in Bolivia. So just as a reminder, what is it that I did? First, I replicated 2002-2003 scenario as best as possible, right? And then I just tweak the enrollment rates and nothing else. All the other parameters are going to be the same. So first, let me show you how the model does mimic reality pretty well, right? The blue line is data, and the model is the red line, the triangle. And so, you know, without assuming crazy utility functions, we are able to match it pretty well. And then we enter the change in school enrollment, right? So primary was approximately 30% increase, and secondary was approximately 20% points increase. So this is the main result, right? So the blue line is the benchmark model, right? With the enrollment rates changed. So that is the drop that would be accounted for children attending school now and more than before. The green line, the bottom line, is the actual change, what actually happened, difference between the early 2000s and 2013. So as you can see, for ages, especially from 25 to 44, we can say that a great proportion of the drop was due to mothers having more time and going for formal markets because the children were enrolled in larger proportion to in school. So it is, I actually quantify that. Yes, so for ages 25 to 34, it actually accounts for 33% of the actual drop, and from 35 to 39, it can account for 40% of the actual drop, which is a lot, right? Because a lot of things happened. It wasn't just policies for children. I mean, income increase and there might be a plethora of reasons for why women participate more in formal markets instead of informal markets. But at least with this simple exercise, well, not that simple, we can see actually that making their time available or putting less burden of child rearing did have an effect with plausible assumptions, like we were saying. So so just some further results. With this graph, I mean, I'm just trying to show that the effect is larger for the bottom 50% of wealth and less prominent for the top 25%, which makes sense. And that's pretty much the story that we have. Thank you.
Thank you. I'd like to invite Emily Ikhide for her comments in the paper. So,
I'm not going to take much of a time, but we're all very tired.
do you want to sit here and speak with the microphone?
Oh, okay.
You don't have any slides. Oh,
Hello,
then it's fine.
everyone.
Yep.
Hello, everyone, and thank you for your paper. It was quite interesting to read, and anything that has to do with care work for women is interesting because coming from a patriarchal system where I'm coming from, where roles are defined, whether you are in the formal market or informal markets, then when you're talking about things like this, it's actually very, very interesting. But so that's on the general side. Specifically, something that I would have loved that you bring out in your paper would have been the contextualization of the proportion of women in the informal sector. I know you said, okay, the informal sector, you have over 2/3 of its workforce, but then what is the proportion of women in the informal sector? Because then you will now be able to understand when you're looking at increase in a child enrollment at school. But then that's another thing. In terms of definition, there were just some things that were not clear. For example, it doesn't necessarily mean that because a child is enrolled in a school, the care work for the mother kind of reduces. When a child goes to school, in most cases, the mother, now that also takes me to you actually looking at it from the rural female mothers and the urbans, because in the rural, I'm coming from Nigeria, where if it's in the rural, when a child goes to school, it means the mother has to go fetch firewood. She still has to cook for the child. So the child care does not end because, or does not necessarily, you can't take it out because the child has gone to school. It may reduce, but it doesn't end. Most women, we all know, in reality, a child goes to school, you still have to clean the house, you still have to cook, there are so many other things that you still have to do. So I think you should have factored in some of these things because it was just out, the definition wasn't clear. So when you say childcare and then you're talking about school enrollment, it's childcare all about just because the children are out of the home. So I think you need to like define some of those things. And then I was also looking at it when you talk about informal sector, because it wasn't really clear from there was no contextual background. So I'm forced to look at it from where I'm coming from. When you're talking about informal sector, we're looking at people that are in the agricultural sector as well. And then we know that, for example, in Nigeria, the agricultural sector employs a higher proportion of women. So if a child is enrolled in a school and the mother goes to the farm, that doesn't free up time for her to engage in a formal training. It may be that she's a farmer, and we all know that there are farmers that may be earning more than even female mothers of people that are employed in the formal sector. So I think you should have kind of defined some of these things to make it clear, so that then when you're looking at the impact of child school enrollment, then we know what we're looking at precisely. And I also think, for example, oh, sorry. Okay. Yeah, I also want to say, because if you come to, I don't have the background of Bolivia. I'm not there, you are there, and you have access to the data. For example, in Nigeria, there is a northern part with the highest population where the men are mostly in politics. They're politicians, so they decide their women don't go to work. So, for example, even if there's an increase in child school enrollment, they are in the informal sector because maybe sometimes when they don't want to be just lazing about, you can just open some businesses around the house, just open anytime, you know, some of those things. So even if a child goes to school, these women are just at home. So, but then they are in the informal sector. So I don't know, I think you probably need to define what exactly you're looking at, because if you're talking about informality and then formality, having a formal training, then you need to define the sectors that you're actually, how you're looking at it, either from the rural aspect or from the urban aspect, because I think if you want to measure this, there will be, I think that might have been a very good contribution if you had looked at it from female in the rural sector, in the rural setting, and then female in the urban setting. That might have brought out some more meaningful results in your analysis. Yeah, in terms of disaggregation of data, I think we can then just talk more on this. Well done, it was a job well done. Thanks for that.
Thank you. Well done. Okay, I'd like to invite the panelists to join me here and give you a chance to respond briefly, though, to the discussants' comments, as well as to take questions from the floor. Ipek's hand went up first, I thought. At least the first one I saw. So Ipek, Ashima, Marcella, Julia, and then no, before Julia, Valeria. Yeah.
Thank you for this presentation and the discussions. I have a question for Ruth. Ruth, in the social infrastructure spending, in one of your earlier slides on how you operationalize these various variables in your model, you showed about a dozen different lines of spending, ranging from education, health, social services, and public health services, all the way to religious spending on religious recreation and religious institutions, right? Religious services. So I was wondering, when you were making applying the model, you were using that social infrastructure spending as an aggregate share of spending for all the countries, because obviously whether the fiscal spending, the increase in social infrastructure spending goes to social services, health, education, public health care, would have very different implications for the kinds of empowerment and agency variables that you were looking at, than, for instance, spending on recreation of male-dominated sports facilities or religious spending would have. Even on elderly and disability spending or family and children spending, what we tend to see in some of the countries with more conservative politics or governments is that those can be cash transfers to women taking care of children or elderly or disabled within the household. So for instance, one of the main arguments and advocacies we've been having with the government in Turkey is that when we talk about social infrastructure spending, they say we've been increasing the budget for religious services and for cash transfers to women who take care of the family members. You know, this is their understanding of social infrastructure spending. Whereas what we're advocating is increasing the spending on setting up of childcare centers, active living centers for the elderly, which are, you know, more socialization of care. So that may explain the differences that you're finding in low versus high and middle income countries. And also, as far as the background literature is concerned, there's a line of studies that compares the composition of fiscal spending on social versus physical infrastructure. The Levy Institute has been one of the leading research centers. We at the Istanbul Technical University and the ILO, with Valeria's leadership, there are a whole bunch of applied studies looking at composition of fiscal spending on social versus physical infrastructure and the implications for gendered employment patterns, gender equality, and women's empowerment. So I think that literature would help to contribute towards revising the model.
Okay, Ashima, I think you're next, right?
Yeah, just quickly. Thank you for the presentations. I have a question to Ruth, maybe like a comment. I'm wondering on the dimensions that you have segregated it as capabilities and then livelihood and agency, empowerment and agency. Did you get a chance to look at Martha Nussbaum's list of capabilities? Because then I think those were very overlapping categories that you have, because livelihood has been identified as a capability in itself. And then even agency and empowerment are all, those both are also in the list of capabilities. And your actual capability segment was also kind of a little, I found it a little vague, because you may need to define it more clearly in terms of what you want to convey through health and other indicators there. So that list may be very helpful for you, because we are doing some similar research, and Jackie Strinio is here. We're doing that research on capabilities, and there's a lot of literature there by Martha Nussbaum and Robbins, and they have excellent list of capabilities, so that would really help you incorporate those in your dimensions and get that segregation more clearly defined, I think. Thank you.
So it's your turn now.
Just in line, really. Again to Ruth, and then also to Gunnar. I had a similar point concerning the different type of expenditure that you analyze in the context of the social infrastructure. So in line with what Ipek just said. Plus, I was reading your paper while you were presenting, so I apologize, maybe I just missed that point, but I wonder whether in your model you can actually introduce some time lags. Because another issue with the impact of investments is really the time lag. And that's something that you might, in case, consider in revising your analysis. And for Gunnar, and this is something that either I misunderstood, or in any case, I just wanted to be, to understand better. In showing us that the informal women participation in the informal sector was reduced in 2013, it seems to me that you imply that a reduction in the informal participation means a participation in the formal one. How can you be sure about that? I mean, a reduction in the informal sector might mean that they are just at home as housewives, especially in line with what was said about the fact that these women are still involved in domestic work and care work, even if the children go to school. So how can you be so sure that there is a sort of substitution effect? Maybe I misunderstood. In that case, I apologize, but I just wanted to be to have this point clarified. Thank you.
Valeria.
Yes, Gunnar, I have several comments and I've done work with the World Bank back in 2005 about informality in Argentina and the way you, first of all, the way you present it as your model that wouldn't allow, in my view, to speak about causality the way you did at the end. You try to make super strong assumptions and see whether that would copy the reality or would kind of be a good estimation. But you told us things like that the absence of childcare hinders women's economic employment opportunities. The employment opportunities that are generated on the demand side of the economy. What would hinder in an event is her participation in the economy. But demand and supply are different things. And also you don't get the secondary worker effect and Marcella's point, because you told us you force them to work. So they are either in the so that is not the reality, that's the model. So then causality could be questioned. And again, the strong assumption, and it's not only your papers, all papers coming from the World Bank on informality, is that informality is a choice. So I, the worker, have the menu of choosing between being formal and being informal. I just decide. And in Latin America, it's typically the case, A, that formal employment opportunities are not there, and B, that the earnings of the informal are less than the formal. So why would I choose to have a lower income if I had a menu? But that menu is not there. So again, I think that you are forcing your modeling on several aspects, and then checking whether the reality can be you can mimic the results of the reality, but with so many strong theoretical and practical assumptions that might not be, at least for me, much reality.
Okay, we have the final.
So just one comment on the first instead papers, yours. Yes, just in the first set of results that you show us, you are using unemployment rate.
Yes.
So actually unemployment rate is a gender bias dimension. So it doesn't tackle really people who, are not in the labor market, formal and informal. So actually I would use some other measure if you have, I don't know, the market participations or something like this, because actually, this is really biased. And so if you want to look at gender bias in these dimensions, employment rate is fine. So the second set of results that you show us is fine, but I will change something about the first set of results that you show.
Bell.
Great, just two quick questions from online. From Jacqueline Velasco. I would like to know if it is possible to analyze to what extent social infrastructure spending and physical infrastructure spending exhibit a complementary relationship. And in the case of Bolivia, is it possible to incorporate labor demand factors to comprehensively explain the transition of women from informal to formal employment? Also, the woman here had a couple of questions as well, but I will let her ask those at the dinner.
Oh, okay.
Woman here,
Okay, I'm going to just take the last question for the evening. Well, I know Mina's hand went up.
I'm going to be very quick, actually. So I was gonna do this as a comment on infrastructure as well. This is very important, and I think you can get data on transportation and things like that. if we go to the point that the discussion is made, it's not like the woman, when a woman starts working in the formal sector or even the informal sector, when the kid goes to school, it's not like it's gonna be less work. In fact, if there's no public transportation or even public transportation, if the schools don't have their own transportation, the mother has to take the kids to school, and all of a sudden she has even more than she had before, in addition to everything that's wrong. So that has to be taken into consideration, and I think really taking also infrastructure and.
Okay, thank you very much for the input from the floor. Now I would like to give each panelist about 3 minutes to respond to the questions from the floor as well as the comments from the discussions, with the promise that wine and some sunshine will promote further conversation on this topic. So let's do it in the reverse order of presentation. Let's have Gunnar go first, then Ruth, and then Ajit.
Thank you, yes, so I will try to address as quickly as possible. So just very quick, the definition of formal or informal job in Bolivia is if it has a retirement. I know there are many definitions. We have to go with what the data, the sources of the data say it's a job. Now there are many aspects that sort of boil down to not whether the model is wrong, I think, but whether should we use the model or not at all. That's because a model of this nature has to make simplifying assumptions, and there are going to be many aspects of reality that cannot be modeled, including, for example, the point of transportation, etc. So what is being done is adding some costs in the model, right? Some burden, some inutilities that are trying to capture whatever else is missed from being very specific. Now, the question whether childcare reduces or not if children are enrolled in school, it's not a binary decision, right? It's not a binary thing. So I think it's plausible to assume that childcare, not as a binary variable, can reduce if children are enrolled in school. Not a zero, certainly, maybe, I don't know, maybe 9.5, but I would assume that it's plausible to assume that if they're in school, childcare burden specifically will reduce for one side. So now the other assumption on whether more time means more formal participation, I would assume, yeah, that might be a little bit hard to swallow. I understand. It's an assumption that we say now, because that connects to what you said. Why would people choose informality? It's not a menu option. It's more like it may happen that they have no other option. Well, in the model, I am saying that participating in formal markets are costly. So I'm being explicit in the utility function. Now, whether that specific utility function should be used for informality decisions, I would argue, well, what about precisely the point that I'm trying to make with children enrollment? So if it's a scenario with ceteris paribus, everything else is the same, and the only cost of participating in formal markets is child rearing, right? So does it make sense that participating in formal markets is of this utility or contributes negatively to the woman's utility? So
Sorry,
that I would perhaps argue a little bit. Sorry, I didn't cover everything.
That's all right. I know that the questions are complex and they're asking, so it takes time, right? Ruth, would you like to go next?
Yeah, I'll try to be very quick with this one. So just a few quick things. So the model, the methodology that I use specifically is a distributed lag model. So it accounts for time lags of the variables themselves and the parent effect. So that's a key part of the analysis. And in terms of the segregation of the social infrastructure spending, yes. So I think I mentioned when I showed that table, that one of the reasons why I decided to disaggregate those key indicators is because the point is to check to see what is really driving the effect. So we start with an overall analysis, which is why I called it a work in progress, not quite done yet, and then kind of disaggregate to see what's really coming out. I would admit, and I think I said this as well, with livelihoods, because I was very, I don't know, flabbergasted by the results that I saw, I did go and disaggregate further to see what is really happening with spending in transport, spending in this, and what's happening, not just the livelihoods as a whole, but the individual indicators on livelihoods to see what was coming out there. And that is something that I intend to do moving forward. Then of the literature, I would admit to not having a very robust set of literature in the presentation, but I think you would see that a lot of that comes out in the paper itself. And that also goes in line with my idea of capabilities versus livelihoods. I think you could argue that there are compatibilities, there are overlaps in many ways, but what I wanted to disaggregate was outcomes versus opportunities. So in my idea, in my capabilities variable, it is what gives women the opportunity to enter into the labor market, health outcomes, educational outcomes. Then the livelihoods variable then looks at what is now happening to them in the labor market. Are women choosing to be self-employed or are they in part-time labor? And I think in what that capabilities construct kind of tries to tackle, and I think it was just talked about here, is the fact that there is a sort of inverse correlation between women who are in formal employment versus women who are self-employed, because it's almost that if you would rather be in formal employment, you would choose formal employment. So there's almost an inverse correlation there. And that's what I'm trying to capture there. So what is really happening in the labor market specifically, and how is fiscal policy trends? And one thing I want to avoid is, because I'm looking at fiscal policy, which is itself a very overarching policy goal to begin with. It's not necessarily targeting specific legislature or gender responsive budgeting. So I have to be very careful with kind of generalistic assumptions that I'm making, especially to generate a latent construct. And I don't want to overladen any latent construct with too many variables in it. So that's sort of like the line of thought there. I think there was one of the, I actually think I may have answered all the questions. Is there anyone's question that I haven't answered?
Well, they will have to just wait.
Oh, okay.
You have the final word, Minh.
Okay,
Yeah.
thank you. I have only one question from Lucia. Thank you very much for that. So yeah, you're right that unemployment rate is a very gender variable. So the thing that I'm trying to do is put it as the ratio. Second thing is that if you look at the table, then we have like a 5 different model. And the first one, I only use the policy rate, but the later one, I use the labor force participation ratio between men and women as a control variable there. So I hope that it can somehow limit, reduce the bias that that you point out. But the point is that I just want to contrast between the first one and the second one, saying that with the unemployment rate ratio, how it's changed, and then with the employment rate ratio, then how the result is consistent or not. Yeah, but this the only variable that I control is the ratio of the labor force participation between male and female as the explanatory variable. Thank you.
Okay, well, thank you all. Thank you very much. Relax and come here tomorrow or recharge for the next day of project. Thank you very much.